say you're switching companies.
Mm-hmm.
I see this one a lot. They've had a bunch of comprehensive claims, windshield claims, towing claims that may have not raised or were not rating for it to make their premiums higher. But what it is doing is keeping them out of higher tier coverages that will lower their will lower their payments because they've made too many claims.
It's not raising their premiums, but it's keeping them from getting a better rating that would have essentially been a discount. It's keeping them from a discount.
Brandon Ducharme is an investment advisor representative of and offers investment advisory services through SCF Investment Advisors Incorporated, an SEC-registered investment advisor, 10150 Meanly Drive, first floor, San Diego, California, 92131, 800-955-2517, www.scfsecurities.com. SCF Investment Advisors Incorporated and Ducharme Wealth Management are separate entities. The information in this podcast is current at the time of recording. It is based upon sources and data believed to be accurate and reliable. The information, opinions, and forward-looking statements expressed herein are subject to change without notice. Moreover, all comments and opinions voiced herein are for informational and entertainment purposes only and are not intended to provide specific advice or recommendations and should not be interpreted as such. Further, the opinions expressed are Brandon Ducharme's and his guests and do not reflect the views and opinions of SCF Investment Advisors or any of its affiliates. Investing involves risk, including possible loss of principal. No strategy assures success or protects against loss. To determine what is appropriate for you, consult your financial professional. This information is not intended to be a substitute for specific individualized tax or legal advice. Ducharme Wealth Management and SCF Investment Advisors do not provide legal or tax advice. These services are provided by separate entities. The guest speakers featured in this podcast are not affiliated with SCF Investment Advisors, nor are they affiliated with Ducharme Wealth Management unless otherwise indicated.
There's people that always say like, oh, insurance is just the biggest scam out there, right? Yep. And I think about that all the time because I'm someone that I don't hate insurance, but at the same time, like some insurance I do, I'm like, this is kind of ridiculous. Mm-hmm. And I think there's overkill on insurance, but there's definitely underinsurance. And then there's proper amounts of insurance that just cost a lot of money and people hate paying that. And it's one of those things. And I know like inside the industry, it's always really easy to say, you know, like there's always the taglines like the most expensive thing you can ever have is cheap insurance. Uh-huh. You can say you can hate making the payment every month until you need it. Yeah. Right. All those kind of things. But at the end of the day, insurance is a financial risk management tool. Mm-hmm. Okay. So if you're trying to manage your financial life, and everyone has to do this, whether or not you have assets or money, really, you still have some kind of, you know, unless you're homeless, right? You have stuff, you have money that flows through your life. Insurance is most appropriately suited for high impact, low probability events. Yeah. Right. So if you think about like term life insurance is great for so many people because you can get, you know, millions of dollars of life insurance coverage at a guaranteed rate for several decades for very reasonable prices if you're very healthy, right? Mm-hmm. One of my policies personally, I have $1 million policy with an insurance carrier. It's guaranteed at a rate for 30 years. So I will be in my 50s when it expires. Or doesn't, you know, and it's convertible too, but, I pay something like $40 a month, you know, and for $1 million, right? So $40 a month, $1 million trade-off. Now, assuming I was going to die at some point in this scenario, right? Like the sooner I died, the better this is kind of morbid, but the better the return on investment would be on a life insurance policy, right? But what's the real probability that I die before I'm in my 50s, right? You're generally talking about an actual, like, godforsaken accident, okay? You know, terminal illness that comes up. Like these things happen to people, and it's super sad and it's devastating for their families. But it's a really low probability. Right. Yeah, I think, and so it makes it a decent trade-off, right?
It's like 11. I think I said somewhere it was like term pays out like 11% of term only ever gets paid out.
Sure, and right, but my illustration being, how many people, so the question kind of becomes, how many people do you know that die prematurely versus how many people do you know that get in a car accident?
Yeah.
You know? So I would say most people at some point will probably be in some kind of auto accident, right? Now the severity will differ, and God forbid you also need a life insurance policy when you get in that accident. But there's all kinds of ramifications that come from car accidents. My point being, people hate paying their auto insurance, but it's kind of because it has lost its appeal in terms of high impact, low probability. It's kind of, now it's high impact and reasonable probability.
Yeah.
Right. And so actuaries at the insurance companies try to underwrite all this stuff, or this. I mean, this is how I understand it to be. You're the insurance guy, so correct me if I'm off base here.
Keep going.
They're trying to always look at the risk tables and say, okay, like they're like profilers, right? An actuary is a profiler in a sense. And they say, okay, well, like based on his demographical information, his driving history, his credit report, we kind of assume that this guy is a pretty responsible driver. And so we'll give him a better deal on his insurance. But this other guy, for a couple of reasons, again, it could be credit, your own personal credit, right? Yeah. Which demonstrates to them like maybe, poor decision making, a family situation, right? Like somebody that is married with kids is going to have a different kind of rating on the actuarial tables than a single person with no kids. Where you live geographically. Yeah.
Zip code. Like, it can differ zip code.
Yep. So all these things kind of go into this kind of number. And then they say, well, this guy, for other reasons, I mean, we think that he is at a higher risk of getting in an accident. We're going to charge him more. And so everyone knows that, like, hey, if you get more speeding tickets, your premiums are going to go up. If you get more accidents, your premiums are going to go up. But there's other factors. And at the end of the day, it doesn't matter if you're the guy that's getting a good deal or a bad deal. You still hate paying the insurance.
Yeah, nobody likes paying it.
And it's because kind of none of it is a good deal anymore, in a sense, right? However, people still need it. And the reason you still need it is because now you have an event that's probable and it's still high impact, right? Mm-hmm. I mean, what's the average cost of a car now? Like, what would you think? You're interesting because before you were in insurance, you used to run car dealerships. So,
I mean, your average ones that are even they've crept up over the year. I mean, depending on like our average new car had moved up to like 40 grand was like the average, even our used at the car dealership I was at, was about a $40,000 car.
Yeah. Yeah.
And so
when I was in high school, I drove a relatively nice car at my high school, and it was it was nothing special. It was a 2005 Honda Civic. And so you're talking about 2010, it's a 5-year-old car. It's probably worth, I don't know, $12,000, $12,000 to $15,000. Yeah, it was a nice car, right? Nice trim level and all that kind of stuff. But now that, like, if you go get a 5-year-old Honda Civic, so a 2019 Honda Civic right now, with like the trim level for our car people out there, EX Special Edition. I don't know, but that's like, so you're not talking the full, the Civic Type R or something like that. That's just the nicer, trim level. That's like a $35,000 car. So
if you're looking at them into there, what's funny, so my wife just actually went and looked because her lease is coming up on her car.
Okay.
So new Honda Accords, the lower end of those were starting to like 33 for a new car.
Sure. Okay.
Higher end was about 40. But if I started like, all right, if we go a few years older, well, you're still $25,000 for one. And kind of on the car market, once they hit like 20, they don't really go lower than that for a while.
And the electrical components and the way that they're built. And I know like Toyota shifted from being able to buy individual parts to, they call them kits. Mm-hmm. And so then you can't just replace one little thing. You kind of got to replace like your whole door electrical module, and the price just goes significantly higher. So now what you end up with is when you get in that accident, it costs a lot more to fix cars, right?
Oh,
way more. And if you total them, it's way more expensive. So now the insurance company is carrying significantly more risk, and people are driving more distracted. Mm-hmm. So now you have a higher likelihood of getting in an accident. And then let's talk medical for a second, because medical, like, just to take a stab, you think the cost of medical healthcare costs has grown faster or slower than general inflation?
Faster,
significantly faster.
no doubt.
So now, if you have to use the medical coverage, and insurance companies are paying out on the medical coverage, right? And remember, your health insurance is only going to pick it up like after your auto is paid out fully, because they're the ones that hold the initial liability, not your health insurance.
Yeah.
And so since they have to do that, it's like this whole other cost. So these are all the things that start going into insurance policies. Again, it's like not a fun bill to pay. And I get that. I don't love it. And if I was worth a ton of money, if I was Scrooge McDuck himself, would I consider self-insuring? Probably. Consider it. I don't know for sure. I'm just saying I would consider it, but I don't have a vault full of gold coins I can swim in. And so what changed for me, like my epiphany moment around property and casualty insurance. So we live in Southern Utah, and there's some nice cars in Southern Utah. And I used to drive a F-350 Power Stroke. This is an 8,000 pound truck. And I was by the Green Springs intersection there, right off exit 10, ton of traffic, right? And a Lamborghini thought it was a cool idea to stop for a yellow light. A Lamborghini, dude. I almost rear-ended a Lamborghini with an 8,000 pound truck.
Yep.
Right. And I just went, oh my gosh, I would have driven up over the top of this car, annihilated it, which is probably a $250,000 car. And then what is the liability on whoever I would have hurt in that scenario, right? And I wasn't like recklessly driving, right? But super fast sports car can stop super fast, and they forget, big truck behind you. All of a sudden, crashes happen. So that's when it just really clicked for me. Like, ooh, I remember calling like my insurance agent to be like, I just want to review my coverage, and I don't really care what I'm paying anymore. Like I want to pay a fair rate, but I want to make sure I'm properly covered. Yep. So that is what I want to talk primarily about. Now that we've gotten out of the way that we get it, paying insurance sucks. There's a reason why it costs what it does, and there's a way to use it effectively, right? So we're going to talk primarily personal insurance today. Homeowners insurance, renters insurance, auto insurance, personal liability. Yeah. Okay. I brought with me a quote from the quote I got last year for my insurance personally. And I think it'd be really cool to just go through this and talk about what are these items and what do they cover. Yeah. So how does somebody understand what they're paying for? Because if this sucks to pay for, we want to at least know what we're paying for, right?
And that's 90% of what I do is I will ask my clients how do they come up with their limits of liability? Well, this is what my insurance agent gave me. Yeah. And you start getting into it and you start asking them questions. That's where the aha moment goes into when you're like, all right, bodily injury. If you hit into me, they're only going to pay out $25,000. Do you have money to cover the rest? Or how much is medical bills? And I don't have that.
Well, and here's the problem is if you have the money to cover it, you want to give it up. Yeah. Do you want to pay it?
Well, and that's what's crazy on half of these.
So, okay. So first thing in this, when I look at this, this quote is I have my wife's car. She drives a 2019 Toyota RAV4, which is not super important to the conversation other than vehicle size does matter, right? And so I don't want to get into like price and talking quotes here. I want to talk more about like, dude, what happens when a Toyota RAV4 slams into another car, right? That's a different scenario than when a Power Stroke slams into a car, and that's a different scenario than like a Yugo getting sideswiped or something.
Here's a helpful thing. The first time I ran into this is I thought I once had a really expensive diesel truck, and I went down to a cheap like $1,000 truck, and it was actually cost me more in insurance. Insurance actually kind of goes off of takes into account of everything, but how many claims they've paid out on that type of vehicle. So you can have a cheap car. A Ford Fiesta is not cheap to to insure just
Yeah,
because everybody rallies that car and they have a bunch of claims. So they just figure, they're putting in their little calculations. This type of car gets in a lot of accidents. So it's not cheap to insure.
Yeah. I remember at one point, Honda Civics were some of the most expensive cars to insure. And I vividly remember my dad telling me about this in high school, right? When I drove a Honda Civic. And, it was because they were just so commonly stolen. Mm-hmm. They were so commonly stolen that it costed more to insure it. And so even though you're like, I'm a safe, responsible driver, things don't happen to me. They don't necessarily know that. They just have to plug in the numbers and run the statistics. It's all a statistical analysis and a profile. Yeah. So don't take this stuff personal. Okay. So it says here, so first line under the car quotes, it says bodily injury, $250,000 each person, $500,000 each occurrence. So break that down. Like, what is that? So what does that cover?
You hit into me. You cause the act. So the big thing we're doing in there is these first ones are liability limits, something that is your fault.
Okay.
That you do it. So you hit into me.
Yep.
And I get hurt. So bodily injury is one person. So for bodily injury for me, you hit into one there. They'll pay out $250,000 per person on there. So I'm in the hospital. They're going to pay out to $250,000. If it goes over that, then it turns on to you or whatever. But they'll pay $250,000 per person, and then we were at $500,000. Was the next one right?
Each occurrence.
So now say there's multiple people in the car, and they're all at $250,000. They're only going to pay up to $500,000, or if they're 100. 150, 50,000, they're only $500,000 per occurrence.
Sure.
It's something that is your fault that they will pay out.
Yeah. Okay.
And so those numbers, as I said, where people want to get into there, those limits of liability need to start covering your net worth because that's what somebody has to go after.
Yeah. And I think I want to cover that further and we might circle back on that. But what's really important is understanding that these are limits of liability, not for you, for the insurance company. Mm-hmm. So they're agreeing that by paying this premium, they'll pay out in an accident that you cause bodily injury claims up to $500,000, but no more than $250,000 per person.
Correct.
And so if the bills or the lawsuit exceeds those numbers, you are still liable because you caused that damage. Okay. There's ways to insure that, and we'll get to that. Okay. Property damage, $100,000 each occurrence.
So this is, you hit into that house, to hit into that Lambo, you hit into something that was the property that you damaged that was your fault. That's what we're going to cover under that.
So if I absolutely, get in an accident and just completely smoke a Toyota Corolla, $30,000 Toyota Corolla, it's good. Insurance is going to probably be able to fully cover that.
Yeah.
However, if I completely smoke a brand new Corvette, maybe not.
You smoke one of those McLarens that are driving around town that are $300,000. You're short.
Somebody's new Tesla nowadays.
Yeah.
I mean, Teslas can be, some of the Teslas can be close to $100,000, right?
Yeah.
So there's, I see a lot of Mercedes G-Wagons. What if you get in an accident and someone's got a Ford F-150, a pretty normal car, but they're towing their boat, and it's a $200,000 Super Aeronautiques, ski surf boat, and boat comes flying off the trailer, and all this damage is caused, and wraps around the car, and all of a sudden, there's a truck and a boat involved, and you cause the accident.
Yeah. Then
that's under property damage.
Yeah, because it's total per accident.
You damage somebody else's property.
Mm-hmm.
And what if you hit somebody and you hit them into another car or something like that?
Yeah, it's total per accident.
Yeah. So stuff can add up. So $100,000.
Yeah.
Okay, uninsured motor vehicle. So this is what I have is $250,000 each person, $500,000 each occurrence.
So now this breaks down into. Yet again, this is something that helps protect you on this end. So there's other ones were there you caused the accident, you did something under there. Now there's something that, I've hit into you and I don't have enough coverage. I'm only doing 25. State state minimums. Like some people say that they have full coverage. That just means they have state minimums, which is in Utah, $25,000 bodily injury, $65,000 total per accident, and $15,000 of property damage. So they technically meet the law. They crash into you. Well, they only have $25,000 of bodily injury to pay out. You're sitting in the hospital bed, leg missing, whatever it is. You've got bills doing up. They will help take care of you on that end, and then your quote on there, that company's going to turn around and go after that person, so you're not going to court to get their money back. So $250,000, they'll help take care of you. So you got $125,000 worth of bills, and they were underinsured or no insurance. Mm-hmm. Now they are going to go see if it's worth the fight to go after me, who hit into you and didn't have enough insurance to go fight that in court. So
now I'm buying, and this is the part that I think people start to get upset about, but it is the nature of the world we live in. I've paid for insurance for if I cause an accident, but now I'm having to pay insurance for you, right? In the sense that like I need to buy your auto insurance now in case you didn't buy it, and I don't want to be on the hook to have my car ruined and have to pay all my medical bills for something that I didn't cause.
Yeah.
Right. So now there's uninsured and then underinsured, both the same limits. And obviously uninsured is if somebody has nothing, and underinsured is if they just didn't have enough. And if you think there's not a lot of people out there that are uninsured or underinsured, go talk to any PI attorney that does personal injury work, and they will tell you the absolute horror stories that they see all the time. Go talk to any law enforcement officer that works traffic. Which you've been.
Yes.
You've been a law enforcement officer that worked traffic. So you know that too. You have a very interesting background. Okay. Auto no fault coverage, personal injury protection. Medical expenses, $3,000 each person. Survivor loss, $3,000 each person.
So that one we kind of use on there that we'll use to kind of bridge the gap or things that they can do into their like deductibles on health insurance. That you get hurt in between there that you can use for, like I said, the no fault, either that helps pay for you on that you can use on that one. If somebody has like a high deductible plan, I've seen them put higher.
So what's like that? Just maybe give me an example of like an auto no fault. Like what kind of accident would this portion of the policy work for me?
So one I can do an example of, it was actually my cousin that got into one. And then he was using that coverage while he was going, because he had it while they were waiting for all the stuff to settle with the court between the accident. So he was using they call it PIP, to go see the doctors, the chiropractors, everything to do it, and then submitted all that to the claim to then get reimbursed in that. And
so is that, again, though, like, tell me about the accident, though. This is like I hit you or you hit me, or it doesn't matter.
Either.
It's just saying no fault coverage. So you can use this, and they call it PIP, personal injury protection. You can use your PIP, and there's, at least in Utah, I believe a law that says you can't raise somebody's premiums for using PIP coverage.
Yeah.
Right. Okay. But it's only $3,000 each person. So, nowadays, if you don't have, medical insurance maybe, or you have a high deductible plan, like $3,000 could be a couple of visits to the doctor or one emergency. I mean, that's one ambulance ride, right? That's not a lot. That's not a lot of coverage.
And you can get more on that, but it goes down to those ones when they start raising it, people start penny pinching on things on that. That's where
you can buy. So you can buy more PIP coverage. So that's a discussion you can have with your agent, but you pay for it.
Yeah.
Right. So anytime that you add more features to your policy, like the insurance company is happy to sell you more insurance, basically. But the more risk they take on, the more they need to charge you in premium. That's just the nature of this. Okay.
Yep.
Okay. Collision. I have actual cash value, $1,000 deductible. So that means if I get in a collision, they're gonna, and a collision is something that I would cause.
Yep.
They're gonna pay on someone else's car to get fixed, or this is my car?
This is your car. So this is So this is one thing when somebody says they have full coverage, they meet the state minimum requirements on liability, and then they have comp and collision on there. So you can have, when they say liability only, would have been just the first things we talked about.
Okay.
And this is where you can get cheaper. If somebody wants to self-insure, I don't ever tell somebody to go cheaper on the limits of liability.
Sure.
Where if you have the money to do it is either higher deductibles on this or no deductibles if you have to self-insure. That can vary your payment on there quite a bit.
Okay.
So you caused the accident. You hit into me. Your car is damaged. They pay for my car with your property damage in that. Okay. And now they come back to you and says, we will fix your car, but you have $1,000 deductible that you're going to cover for that before we start kicking in on anything.
And so actual cash value means it doesn't matter how much it costs to fix my car. Mm-hmm. They're going to either pay whatever the actual cost is or
pay your car out.
Buy my car for me, basically. Right? Okay. Comprehensive, same situation. Comprehensive is if something tends to happen to your car, though, right?
It's a no fault. Like
it gets in a flood.
Or tree falls on it. You hit a deer. Deer's a comprehensive claim.
Okay.
And this is a big one to know the difference and actually have an agent that talks to you on this. Fine example. Rock rolls into the road, is currently in motion, and you hit it. That is a comprehensive claim. Rock is stationary in the middle of the road and you hit it. That is a collision claim. And when you're talking about how your rates get raised or whatnot, comprehensive will hit you less on your premiums than a collision will.
Because it's generally viewed that a collision is more avoidable.
Yeah.
You know, comprehensive is really not your fault.
Yeah, it's not a fault claim.
Yeah. Okay. Or at least generally perceived as something that's not your fault. So, okay. Emergency roadside assistance, $200 each occurrence. I think that's pretty straightforward.
Yeah.
I get a flat tire, I run out of gas, whatever. I can call up, this insurance company if I have the policy, and they, send somebody out, a tow truck or whatever, and take care of me, and they will pay up to $200 to have that service taken care of. It doesn't have a deductible, but if I make that claim, I'm probably going to be paying more in insurance next year.
That one, when I've seen on there, yet again, there's such thing as that they're playing more into the amount of times you're making in a short amount of time, how many claims. But just to make one into there, I have not seen, if any. But what I have seen on these small claims that, say you're switching companies, I see this one a lot. They've had a bunch of comprehensive claims, windshield claims, towing claims that may have not raised or were not rating for it to make their premiums higher. But what it is doing is keeping them out of higher tier coverages that will lower their will lower their payments because they've made too many claims.
So it's not raising their premiums, but it's keeping them from getting a better rating that would have essentially been a discount. It's keeping them from a discount.
Yeah.
Okay, that's fair. So it is a silent cost in the premiums the following year. Auto rental reimbursement, $40 a day, $1,200 each occurrence. So that is whether I hit somebody or they hit me. I need a rental car. They'll cover $40 a day towards a rental car, up to $1,200, which is a pretty reasonable amount of time.
Yeah,
but $40 also I'd like to highlight is probably not going to cover. I mean, I don't know what that covers you, an electric scooter these days or something.
And depending, you can yet again raise it and lower depending on what type of car they're trying to replace and do on there. So it's not going to get you a high end one. Last time I rented a car was like $37 a day, but it was the low end. Yeah,
you haven't rented a car recently, have you?
No, I avoid that.
Yeah. I don't rent cars for fun. I sometimes when I go on trips, I have to rent a car, and boy, it's not cheap these days. Which is a whole nother side conversation, which I think is prudent. I don't want to blow over that. I just had the question. Talk to me really quick about if you go out of town and rent a car, does your insurance cover that, or do you need to make sure to buy that policy that's getting offered to you at the counter? Or on Turo or wherever you're renting the car?
Now, I can't speak on this because I'm still finding out on Turo is kind of a gray area that I've been researching on there because that's their personal car, that there's kind of this weird thing. So I don't know on that one. On a normal Hertz, one of these other ones,
Sure.
if you have full coverage, it will cover that car. Where there's a big gap that I have found, though, that they don't cover is the insurance company say you crash it, your fault, do everything. There's a cost of loss of use that insurance doesn't cover on that one. So that is your gap that is between your own insurance and the insurance that they offer that you are kind of liable for.
Loss of use. And so that is a liability that you would owe to the car
Rental place.
the
for not being
car
able to use
rental
it.
place that says like, hey, this car we normally rent for $100 a day, and now we can't for 3 weeks. I'll get fixed. So you basically owe us rental fees on this car for 3 weeks.
Yeah. So your insurance will pay to fix the car, your liability limit, stuff like that, but that's the one gap.
Okay. All right. Good conversation. Okay. That's auto insurance. And then, yeah, anything we're missing on auto insurance before we move on?
The big thing that people are going when they're wanting to do for their rates, and people, you've had conversations about it, the way that it is starting to go and that I'm seeing in a lot of what I've researched on there is only way you're going to get bigger discounts is going to be to personalize that account by some way that they track you and how you drive. And so people are mixed feelings on how they do it, but that is where a lot of companies that you're going to start hearing, I hear them on the radio on there, is they are going to offer bigger discounts by being able to usually put like a chip or something on your phone, download an app and track texting and driving. That's a big one they're doing if you're using your phone, speeding and brake usages, and then times a day. There's a bunch of stuff that goes into it, but that is how, if somebody's wanting a bigger discount now, a lot of companies are kind of forcing you to do that. Yeah,
and people that know me know I'm quite conservative, and I'm not exactly what you call the biggest fan of big government, or anything that's, Big Brother and all this stuff. And so I initially don't love that. However, when I take a step back and think about the math behind this and how the actuarial tables work, this is what I've come up with is, basically, again, going back to the initial conversation here, insurance is really good for something that is high impact, low probability.
Yeah.
But because people are crazy drivers, we're talking about something that's high impact because the costs have gone up so high. And it's like reasonable probability, not low probability, reasonable probability. And so, you kind of get in these buckets where they say, hey, according to our statistical analysis, you're likely to get in one accident every 3 years or whatever. Yeah. And so, your coverage is this much. And I know that's more than you'd like to pay because, $1 is more than anyone would like to pay.
Yeah.
But that's kind of your offer. And you say, well, hold on a second. I'm a really safe driver. I know your numbers say that and the demographics say that and all these things say that, but I've never had a ticket or whatever. I'm a really good driver. I'm a really safe driver. I don't text and drive. I don't do all these things. I should get a better deal. And they say, well, the tables say, the demographics tell us, and, listen, we don't insure one person. We insure thousands or even, millions of people, right?
Yeah.
So we have to follow the demographics. You say, but I promise. And they say, okay, here's something that you can put in your car. Prove it to us.
Yeah.
And if you approve it to them, they'll listen to you.
Yeah.
And they'll give you a discount. And now you take that back. That discount is what kind of enables you, in a sense, in to go back to high impact. You've proven them that in your case, it's more of a low probability. Yeah. And so you get a discount.
That you exhibit good driving habits.
I'm not saying everyone should do it. I'm just saying understand that's what's happening.
Yeah.
Okay. Trailers.
Okay.
A lot of people I know, a lot of clients of mine have trailers. Huh? Cargo trailers, campers, whatever, boats. What if do I need additional coverage on those things, or does that if it's hooked to my truck and I'm pulling it, it's all covered now under my policy? How does that work?
So now we got to clarify on there that we are talking about personal, because we do commercial
Yep.
then forces you to
Yep.
have a whole
Totally
different
not
thing.
talking about like a work truck with a work trailer or anything like that. This is just my.
So personal ones, your, like, say I'm hauling my side-by-side, that trailer behind there follows my truck coverages for liability. Now, there are ones, say I caused the accident and I want them to fix my trailer. You can put deductibles on there for like comprehensive things to fix your trailer on an accident that you caused.
Now, do you have to get that like per trailer, or is that something that you can add to your auto policy that would just cover any trailer? That you're...
Well, for mine,
or does that vary from company to company?
And it may vary from company to company. I have most of them that I've seen when I've seen their declaration pages, when I'm looking through, has been individualized by trailer or by thing. I'm not saying there isn't one out there. My experience has been individualized out, and then you'll have a different deductible onto there. And some of these, when you start doing it, like ours will go, you'll put a stated value on it.
Yeah. So the scenario where, you know, I got a truck and you got some dirt bikes and trailers, and I say, hey, I'll tow the trailer. Let's go ride dirt bikes. And so now I'm towing with my truck your trailer, and we get in an accident, and trailer jackknifes, and your cargo trailer's got a big dent in the side now or something, right? Is that going to cover? Is my policy going to cover your trailer?
For this is one where you're going to go start getting into the adjusters is going to start coming out into it. But as far as the liability that comes into it for the accident that you caused, even from that trailer, it's going to on there. When you start talking about fixing your own type deal, that will start going into what it's going to be total per accident, because technically there'd be property damage on your behalf.
Yeah. So I think instead of beating a dead horse, what I want to really just drive home for people is, if you have these types of scenarios, right? If you have like if you rent your car on Turo, or you drive what's the Airbnb of cars, man? Uber. If you tow stuff that doesn't belong to you, right? If you have trailers that you let other people tow, right? Have these conversations with your insurance agent and very specifically ask about, in this type of scenario, how would this work? Am I covered? What are my liability? You know, what liability is the insurance company going to take as a result of these policies? And what liability am I retaining myself? And if it's liability that you don't feel comfortable with, buy some more insurance, or have a parameter in your head that says, I don't tow other people's trailers because that is liability that I don't feel comfortable with, right? Or whatever it may be, right? And that's one of the best ways, I think, to save on insurance, is know what your kind of limits are personally, and just have some things in life that you're just okay saying, no, I'm not going to do that. I'm not going to, no, I don't want to go drive your Lamborghini, even though you offered to let me drive it, because I don't want the liability if I crash it. My policy wouldn't cover that. Know that. If your policy covers that, and you know you have plenty of policy if something goes wrong, and you feel like you want to do it, make your own choice. Right? We're all adults, but understand what your damn liability limits are and what happens if accidents happen, and then live life accordingly. Liability coverages. Bodily injury and property damage, $300,000 each occurrence. Medical payments to others, $5,000 each person, each occurrence.
What are we on?
Liability coverages
For
personal liability.
Oh, and this one goes into your home.
Okay, so we're on to home coverage.
Yeah. So it's broken up into there. So now somebody comes over to your house, liability, something happens at your house, and I get hurt, and I'm trying to sue you.
Yep. We're mopping the kitchen. They come through on the slippery floor.
Yep.
Break their leg, and they have to go to the hospital, and they say, well, we don't have great insurance. We'd really like your insurance to pay because it would cover it. And so even though we're friends, I would still like to sue you because I know your insurance will just cover it. I know I'm not actually taking anything from you. It's just the insurance company. So, I no harm, no foul. It's $100,000. Yeah.
Everybody's friends, so there's money involved.
Yeah. Right. But that's what that would cover. Right.
Yeah.
And $300,000. So if there was a really significant risk at your house, people with pools, people with trampolines, people with a lot of power tools. You know what I mean? That could run out pretty quick, especially when you get specialized surgeries and reconstructive surgeries and that kind of stuff. 300,000 isn't as much as it sounds like.
And this is especially where finding a good agent that you may not like their answers, but will make sure you get care, because people think, oh, it's going to get taken care of no matter what.
Yeah.
Things have to fall. Trampolines is a big one. Insurance do not like trampolines. Before us to even have one, for you to have one in your yard and us to be okay with it, you have to have a completely fenced off yard. Mm-hmm. And don't think that nowadays with insurance that because you don't meet that, like you snuck it in, that they're just going to pay for it.
Yeah, they just say that's not covered. If you read the fine print, we said trampolines aren't covered unless you disclose it, and you meet these requirements. So why do they care so much about there being a fenced-in yard if you have a trampoline, Rustin?
It's going to, that you're doing as much as you can to deter. It's a deterrent for somebody just walking into your backyard and jumping on your trampoline and getting hurt.
Because here is the raw truth of it, right? And correct me if I'm wrong. You have a trampoline, you're out of town. Little Johnny says, well, I know Rustin's out of town. Yep. I'm going to go jump on a trampoline. I've been over to his house 100 times. Mm-hmm. And, normally when you're there, maybe you say like things like, okay, you can't do any double backflips or, you're there's responsible adults watching, so you keep everything in check. And so you've always felt okay about your insurance and all that stuff. Well, no one's there. Little Johnny comes over anyways, and little Johnny breaks his neck on your trampoline. Mm-hmm. Who's liable? You didn't tell him he could come over.
No. It's still liable. That's what's crazy nowadays and what people can sue for when you're not even there.
So, and maybe breaking a neck is an extreme example, but even a leg or an arm, right? Mm-hmm. It's the fact that you have this property and you're liable for what happens on that property, regardless of whether or not you okayed it or said it was okay or participated or anything. Like, you hold the liability, and that's just the unfortunate fact of the legal system in our country, right?
Yep.
I don't wish it was that way. I don't agree with it, but it is. Mm-hmm. So what is medical payments to others? $5,000 each person, each occurrence.
So now this is another one. So that we can still keep our friendship over. This is kind of like a not at fault type deal. You're over at my house, and now you've cut your hand open.
Okay.
Doing something. So it happened at my house. Okay. I'm not really liable for it. Wasn't my fault, but it allows you to make a claim against mine to go there, get some stitches done, go to the hospital, get that done, to where, you didn't want to use your insurance, happened at my home, and you can use medical payments to others on that one.
Okay. So this is like for a minor thing.
Yeah. $5,000 is all it's going to pay out.
But that's it. And you go looking for a dime over $5,000, mm-hmm. and it's going to go right into that bodily injury, property damage mm-hmm. claim. And now someone's making a claim against your insurance. Mm-hmm. Your rates are going up, mm-hmm. and you got a problem.
Yep.
Okay. Property coverage. We got, time is running by, and people are probably actually sleeping. If they've been listening. Okay. Property coverage. It says dwelling, and it has the amount, an amount on here. Uh-huh. And it says, it has my deductible. And then it says guaranteed replacement costs with 125% cap. And so let's say the dwelling, right? And so here's the thing. That number is less than my home is worth. Like a reasonable amount less than, like, if I looked my house up on Zillow and it said my house is worth, X number. And it's like, well, why is my policy this number below that? Did you let me down as my agent, Rustin? Or are we trying to save a buck here?
So the big thing on that is one of them that gets into there. Say your house burns completely down.
Okay.
You are not rebuying that lot, which is part of your home value now. Mm-hmm. We're only rebuilding your house back to what it was before. So that one's a big one. When you get some of these lots up the street from my house, a lot's $250,000.
Yeah.
So, there's a big gap in between that. And that 125% cap goes on there is they'll pay 125% of that number to rebuild, to replace what you have on there. And another thing people don't get is you can say you want to raise that number to $1.5 million. Where you have guaranteed replacement costs, you can you can make that number whatever you want with underwriter approval, but does not mean, so say your house burns down, you have $1 million worth of coverage on it, but it's really only worth $500,000.
They don't give you a check for $1 million.
No, they just fix it. They replace what you have, and you just been paying on insurance of $1 million, would not get anything back from that. So that's what will happen.
So they're going to rebuild the house. That's, I mean,
they indemnify you. They make you whole. That's all they're doing. They're not making you rich.
It's all insurance is for, right?
Yeah.
Even life insurance, right? That windfall that people get from life insurance, people forget like that's just the economic value of somebody's life. That's not like it's supposed to be just like a windfall that you're rich now or something. It's just to try to make the situation whole financially. Household personal property. So this has an amount on here.
They usually, like ours, we have to do 70% of the home's value is what they make us put the personal property at. And
so what that's saying is if somebody broke into my house and stole all my stuff,
or your house burned down, stuff like that.
Okay.
If you took the easiest way I could explain to people, you took your house, turn it upside down and shake it, the stuff that falls out would be personal property. So your house, you get a complete loss on your house. That's how much you would have to go into it. And without going too far into those things, those are for average type deals. If you have, what happens if I have $1 million cash? Well, you should put that somewhere else. Like a lot of these will only
put it in a safety deposit box.
They'll only cover up to $200 cash because everybody's house that burned down would have $1 million worth of cash.
Right.
Or expensive jewelry.
It would have had $2 million.
Yeah.
Yeah, so. I had a bunch of gold coins that mysteriously melted and eviscerated in the fire. So metal doesn't burn, obviously. It's a joke. So that's the coverage that's like to rebuy your furniture and your clothes and your, kitchen stuff and all the normal daily things. Replace your tools, all that. Does it cover high-end watches and collectibles and
up to a certain point?
Jewelry?
You're gonna read in there that you'll have like firearms, $250,000 per firearm, $5,000 per occurrence. And so if you have something that's going to be a high-end thing, you're going to want to schedule it. And so that means you're going to get specific insurance on that item. Like, and for in case ours, anything $4,999 and below, I can take a stated value. You tell me this watch is $4,999, and that's what it was worth. I can put that on there, and that's what they would replace it to. Now, yet again, same thing. You tell me it's worth that, but I can go and replace that same watch for $250. I'm not writing you a check for the difference.
Yeah, they're going to buy you the new watch, basically.
But if you go over that, they require us to get appraisals done, and then they will.
But if you have a watch that's, maybe arguably a $6,000 watch and you're going, I don't want to go through the hassle of getting this bid out, you can just say it's worth $5,000. You'd put it down, or $4,900.
I've already went through that with an underwriter. $4,999.
Yeah. Okay. And at least you get some coverage that way, in case something does happen. Okay.
Now you're into optional coverage.
Optional coverages, man. Ordinance or law, $10,000 each occurrence.
So one thing that you're going to start going into, and the older the home gets, we suggest raising that. As we talked about, insurance makes you whole. It doesn't upgrade you. So ordinance and law
gives you what you had.
Yeah. So if your house burns out, it's an old house and it burns down, and now the wiring doesn't meet code, the plumbing doesn't meet code, and you got to upgrade that. There's insurance companies that are getting sued because they went back to the person and says, you owe us $20,000, $25,000, $50,000, whatever it is to upgrade your house. You want it rebuilt, but we're not upgrading what you didn't have. Your stuff's out of date, so you got to pay to upgrade that.
Yeah.
That's where that's going to come into.
Okay. Water backup of sewers or drains.
Yep. So now on that one, it's broken down into two different things. So they have your dwelling. So this could be walls, floors, anything that's backed up from the sewer.
Okay.
The sewer backs up, overflows your drain, your toilet, ruins your walls. You have coverage for that. And then you have a separate one on that policy to where if it ruins personal property, couches, laptops on the floor. We've seen that before because it flooded.
Yep.
You're going to have two separate on that one.
Two separate line items. Okay. Residential equipment breakdown.
On that, so that one comes into like a, best way to put it, power surge, or goes through and blows out your AC unit, blows out TVs. When I was young, we had lightning strike our house, actually. Blew out the sockets out of the wall and blew out things. So you have $100,000 worth of coverage on there.
To go fix all that equipment. Okay. Appliances.
Yeah.
Essentially. Okay. So that's like $100,000 coverage. The dwelling, by the way, was $25,000 and the personal property was $5,000. So that's just saying if my sewer backs up, and they'll spend or they'll, reimburse or indemnify me up to $25,000, less my deductible on the home, $1,500 deductible. In the case of this quote, for replacing floors and baseboards and drywall and paint and probably fixing the sewer line.
And so that's what a lot of these you're going to find out. Insurance hates water.
Yeah, it destroys things really fast, and it's horrible to deal with. And you know who really hates water? I do. I mean, I like drinking it. I hate it almost in every other. I hate it in my home. I hate it by my stuff. It just destroys stuff.
Yeah, because if you want to see right now with insurance companies, they're finding we've been able to bring some on if they've had a water claim period in the past. Some insurance companies will not take them.
Yeah.
So insurance hates water.
Service line, $10,000 each occurrence.
That main line that comes in and out of your house, so you keep getting those letters from saying that it's kind of like a no man's land. City doesn't want to take care of it. You don't want to take care of it. It's the main line coming in. It's coverage on that.
So if like I actually had this and I just replaced it myself. I dug up my own front yard and replaced my service line. My buddy's a plumber. My other buddy has a backhoe. It helps to know people.
Yeah.
We knocked this out. But if I didn't have, if I hadn't have grown up on a farm and I wasn't over eager to run equipment every once in a while, I could have had, $10,000 of coverage to go out and replace that main line out to the street with the exception that it's still going to have a $1,500 deductible in the case of this quote. So like really $8,500 of coverage. They needed to bring out some big equipment and I pay a contractor and all this stuff. And then it would have still, if it had backed up, covered replacing $25,000 worth of baseboards and floors and paint and stuff in the home, right? And $5,000 worth of laptops that got ruined on the floor or clothes that are real crappy now clothes. Yeah. Or whatever, right? Okay. A $2,500 limit applies to service lines 50 years or older. So if you have an older home, be aware that insurance companies are pretty well aware that your service lines suck and you have a higher probability of having an issue. So it goes back to, again, low probability, high impact, low probability. And they're saying, hey, buddy, more than 50 years old, that the materials were different back then. It's been a long time. Roots grow into stuff. Things break down. Yep. We're creeping back up into, reasonable probability. And so, rather than increasing the rates, we're going to just decrease our liability. We're going to give you less insurance. Yep. Okay. So be aware of that. Okay. We're moving down to, farm, ranch, and personal umbrella coverages. Yeah. Umbrella policies is what most people are going to know these as umbrella policies. Yep. You have, 2 parts on this: protection for personal vehicle and or business liability, and then protection for personal liability and or farm ranch liability. Right. Yeah. At the end of the day, what it is it's each occurrence with an umbrella aggregate of $1 million is what's on this quote. And so what does that cover? Why does somebody need $1 million policy? So that sounds like a lot of money, a lot of coverage. It doesn't look very expensive on this quote. Why do you get all of a sudden you get all this coverage? It's not a lot of money though. What the heck is it covering? So on those umbrella coverages, when we're talking about, like you were talking about term life insurance where you get a lot of coverage for a little bit amount of money, this is where we start getting into to where if you meet the minimal limits of liability on your vehicles, on your home,
a cheapest way to get a bunch of insurance that's on top of that is to add an umbrella. But everything that you own has to meet those limits of liability. They get very picky on this. You can't just have different cars at different limits of liability. And so for ours, 300 combined CSL is going to be your lowest that you can get. So $300,000 for the accident, but then if we add an umbrella on that, we're looking at $1.3 million. So once those limits of liability run out, now we have $1 million on top of that, and that goes for your liability limits on your home as well.
So if we go back to like the scenario like we talked about earlier, right? God forbid you rear end and drive over the top of a Lamborghini with a big truck. Okay, people are going to be hurt. You're going to have damaged. Right? If you go back to the property damage, all you had liability for was $100,000 for the property damage. That's a $200,000 car. And bodily injury, $250,000 per person. Say there's two people in the car. All of a sudden, there's $1 million in medical bills, right? So you're at $1.1 million. So you would have to pay, right? So like if you don't have an umbrella policy, they'd say, hey, we'll pay the $500,000 in medical bills. We'll pay the $100,000 in the property damage. You're on the hook for the rest, dude. Yeah,
and especially if you have it.
And that's not. Do you have that in the checking account? Right. There's attorneys that are going to look at you, and again, it all goes back to profiling. It largely goes back to profile. There's attorneys that specialize in looking at, okay, where do you work? What kind of income do you make? Can we garnish wages for the rest of your life? Do you own a home?
Retirements?
How much? Yeah. Do you have that retirement account? Do you have, how much home equity do you have in there? You got cars that could get sold. Do you have, you got collectibles, there's all right. Do you come from a family with money that you might receive an inheritance later on, and they're going to sue you all the way through that inheritance?
Yep.
And make sure, and the longer those lawsuits go on, the potentially more you're taking on, because at the end of the day, you're going to end up potentially owing legal bills on top of all this that you're liable for.
And with today's day and age, we've had a friend, wasn't a client of mine at the time, got in an accident. Everybody walked away. Zero. Nobody went in an ambulance. They found out who he was, magically over $140,000 worth of bodily injury. Yeah. And his limits did not cover that. Yeah. So they went after it because they found out he had money. So that lawyer got it. He's got money. We have a case. Yeah.
One of the easiest ways to avoid getting sued is not letting people know what you always have. But one of the next best things you can do is get an umbrella policy, in my opinion. And the reason why is because if somebody makes a $1.1 million claim and you have now effectively $1.3 million worth of coverage, right? Your insurance company is going to fight the whole battle and absorb all those legal costs and deal with all the headache, because they're trying to defend how much they have to pay out. They've agreed to take that liability. This is the effective use of insurance, right? The effective use of insurance is not for, I was trying to drink my morning coffee and accidentally hit a fire hydrant, and now I got to fix my car and it's ruined my day. That's not what insurance is for. It's kind of your fault. And so you're making not a good trade because it was something that's like avoidable, and you shouldn't have run into a fire hydrant. Okay. What is a really good use is, I heard of an example in our town a couple of years ago. A kid dove into a pool head first, and there was something down at the bottom of the pool, and it basically mutilated a child's face. And again, if you look back at the base policies on
$300,000,
which this quote I had generated, it said give me good coverages, right? Yeah. $300,000. This kid's medical bills were over $900,000. So had that family not have the umbrella policy to help cover that, their friends, in order to save themselves, would have had to sue their other friends, right, out of their home. Yeah. Potentially. It is not a fun situation. So
if somebody's out there listening right now and you have a pool at your house and you don't know if you have an umbrella policy, call your agent.
I would say umbrella policy. Sometimes people ask me like, well, when should I get an umbrella policy? Okay. I am basically, I'm a pretty, my whole philosophy, if I buy the right insurance, if I do the right things and I manage risk the right way, it allows me to be really risky in other parts of my financial life, right? So I can make riskier investments that hopefully generate more reward, right? Like that's me personally. I'm not recommending everyone do this. So when I'm talking through it with people though, one of the things I'm trying to identify is like, okay, do you have assets and how easy would it be for you to go over the limits? You know, if you already bought the most amount of insurance you can buy, it's like, do you live in a community? Are you out in the middle of nowhere in Kentucky that's really rural and not a lot of really nice vehicles? Or do you live in, you know, Long Beach where everything's $100,000 vehicle, right?
Yeah.
Like, we're in St. George. There's a reasonable probability that there's not a shortage of really nice cars driving around in Southern Utah. So if you drive a big vehicle and you own a home, I think that's a trigger for a good consideration. These are all things that should make you want to consider an umbrella policy, right? Like just think this through, call your agent, have a conversation. Drive a big truck. You have recreational vehicles, dirt bikes, boats. If you have a trampoline, if you have a pool, if you have a reasonable retirement account, right?
Yeah.
Pretty much like once you get to the point where you're like, hey, I'm going to actually plan for retirement. I'm starting to make headwind. Umbrella policy.
Yeah.
Okay.
If you have extra spending money for something, you need to cover it.
Yeah. Yep. So home ownership is like a great trigger for an umbrella policy. If you don't own a home, by the way, the insurance coverage we haven't talked about today is renter's insurance, which is probably the cheapest insurance you can get and is probably one of the few insurances around that still carries a very good risk return trade-off, right? Low probability someone's going to break in and steal your stuff. If you're a renter, super high impact likely to you, right?
Yeah.
And so, I mean, when I was in the Army so this is the last time I had a renter's policy, I think I paid like $200 a year and it covered all my stuff. And somebody actually broke into my car and stole a bunch of my Army equipment.
Yep.
Which when you're in the Army, if you have a pen, it's not a 10-cent pen. That was bought through government contracting. So it's like, $35 for a pen now.
And they want it back.
And they want that one back.
Yep.
So it was thousands of dollars and my renter's insurance picked it up. Now I still pay the price for that. It's been years. And I think last year when I changed insurance companies again, they're like, well, you had this renter's claim and it's been like 7 or 8 years now.
Yeah.
Right. But like, I'm glad I had it.
Yeah.
And that would have been really financially devastating to me actually. Okay, not financially devastating, but that would have really sucked if I don't know, like a lot of people don't realize how underpaid the military is. And I really adjusted my lifestyle down to when I joined the Army. But like if I would have come out of the Army and I was in that transition period, I didn't have a job for a while, right? And I was going to go to school and I was going to do all these things. Like if I would have had to also carry this burden of like a debt to the U.S. government for thousands and thousands of dollars, it would have really sucked. It would have actually really sucked.
And it's starting to become more prevalent. I've had more requests lately from people that didn't know where they are, but their renters, the people they're renting from, are now requiring you to have it.
You should. I think every reasonable landlord should require a renter's policy. My opinion. Nothing more. That umbrella policy on this quote, and insurance companies are going to vary. And I have very specifically not mentioned which insurance company we were looking at, going through a quote on today on this. It's a pretty generic quote anyway, so I don't know what all factors are going to drive. I'm not an expert on actuarial tables of umbrella policies. I mean, by no means an expert, but for illustrative purposes, this policy is between $200 and $300 a year for that extra $1 million coverage. So you take a lot of chips off the table from risk standpoint for, let's call it $300 a year. It's pretty reasonable. It's a good conversation to have with your agent to understand if it's something that is available to you and you should consider. And I don't think there's any major insurance company that doesn't offer an umbrella policy. No. That's not something that's unique to anyone or this or that. It's a pretty standard practice, and you can usually get them in up to $3 to $5 million. Yeah, and they usually go in $1 million increments. Yeah, is my experience.
One to two is pretty average. You start getting into other ones, you're going to have to prove. With us, like we'll have to get an underwriter approval. Why you need $5 million worth of coverage, and have you been sued for a bunch of stuff in the past?
Yeah, but if there's a reason why you need it, right? I mean, ultra high net worth people. I remember when I took my course for the accredited wealth management advisor, the guy teaching the course said, he felt like he talked to people that would recommend everyone that is worth suing, just go get a $3 million umbrella policy, because no personal injury attorney out there is gonna try to go to litigation and sue for more than $3 million when they can just get a settlement within that range. And the insurance company would pick it up. I don't know how good of advice that is. I'm just saying that's one thing that was mentioned in a class I took. I think about that sometimes. I also think a great way to turn a small lawsuit into a big lawsuit is when somebody finds out you have an umbrella policy. So be cautious around that one. If you do get in an accident, play stuff close to the vest a little bit. Yeah. Probably hire an attorney right away, and play a little bit cool. Get some advice from some trusted sources. It's insurance companies. When you were a cop and you arrested people, what'd you tell them?
They had the right to remain silent.
And why?
Really?
Anything they say
can and will be used against them.
Is there anything in there that says anything you say might be used to help you?
No.
Nothing. It's like, so I mean, this is my personal belief. Like, hey, have an agent that you trust that you can call up and ask some questions to before you talk to the actual insurance company. Get some industry insight. Talk to an attorney right away.
Personal opinion, sometimes less is more.
Yeah, sure.
There's some things seen out there on talking with people on some of their claims that because they worded it wrong, not they were lying, that they just worded it wrong, it got categorized wrong.
So okay. I mean, we're pretty much out of time, but this is a funny example. This is a funny example and good. I have a family member that, let's see, he brought the deer over to our house in the trunk of his car. And I remember this. So this was, let's call it late 90s, early 2000s, right? Hits a deer, right? And this is out in the Midwest. It happens, right? Yeah. There's a lot of deer. Yeah. Anyways, so he calls up the insurance company. Hey, I'm not sure what I need to do. I just hit a deer. And they said, oh, we're so sorry. You're not covered if you hit a deer. And he's like, what? So he hangs up the phone, right? And he calls back up and he gets someone else and he says, hey, I'm not sure what to do. I was just driving and I just got hit by a deer. Yep. And they go, well, yeah, not a problem. You're going to be covered. Mm-hmm. And so it was just the difference in framing. And I think these are one of the things that drives people to hate insurance companies so much with such a vigorous passion. Always. Yeah. It's like this scenario is the same. You word it one way different and they say not covered or yeah, no problem. We'll cut the check. Mm-hmm. So look, a great way to navigate that is to just get an attorney right away. In my opinion, just engage a professional that does this regularly. How often do you call your insurance company? Not very often. Once every couple of years, a couple times in your life, you're going to call the insurance company. Go find a professional that talks to insurance companies every day.
And there's one, this is not all insurance companies are created equal in what they pay out. And not all insurance companies are created equal in how they get customer service. A lot of mine have I just barely got on a phone call with a client today. They got in an accident. And that's what they called me on there because the cops were refusing to come out to the accident. Mm-hmm. And so asked me, just personal advice on some things that they could do and talking them through it on there. Not legal advice, not things. That's what we did. Gave them a phone number to a lawyer, gave them the phone number, claims. He told them to take pictures of their own, all these things on there. But that's the difference that's going to be in there. And when everybody asks me, me and you've talked about this before, I see this all the time on Facebook. Who's got the cheapest rates? Who's got that? That is a piece of the puzzle. How I tell people to shop for insurance, go to auto body shops, go to home restoration places, ask who's paying checks.
Hey, if you're on an absolute fixed budget, if you do not have money and you're really trying to just make it by, you may have to cut you may have to shop for the cheapest carrier. And I fully appreciate that. And I don't wish anyone to be in that situation. No. I always want to see people rise above, right? But you know, if insurance was literally just all about having the absolute cheapest policy at all times, there would probably not be as many carriers. And quite frankly, a lot of the carriers, I mean, it's pretty well known that they actually just charge more than some of the smaller carriers. And that's a derivative of the smaller carriers not having the same credit rating. So they don't have the ability to pay if there's a mass, you know, if half the state burns down, they might not be able to pay. And if you pay for insurance and then you need to file a claim and they can't pay, that's really bad insurance, right? Because you don't have any. So there's that. And so a company that has the right balance sheet to pay all the claims is probably going to charge more. They know that they're worth it. They have a higher credit rating, right? That's one thing. The other thing is the hassle, right? So if you take somebody that is, I'll use myself as an example here. It's like, okay, I run a business. I'm busy. I have a family. I have things to do, right? And the last thing I want to do in my life is get on the phone and argue with insurance companies. I don't want to do it. That is like, I just, if something happens to me and I'm already having to deal with like my car's wrecked. I'm in pain. I'm dealing with going to medical appointments now and all stuff. I don't want to deal also with arguing with my insurance company about getting my car fixed or not, or this or that, right? And so good insurance companies and some of the insurance companies that do charge more, they charge more because they offer that more concierge service, right? That service that is geared towards, hey, we'll be easy to work with when there is a problem. We'll be there. We'll have the money to pay the claim, and we'll be a little bit easier going about it. And they can't say that, right? In black and white, both companies are going to pay the claim. So one company's going to carry a reputation of being a little bit easier to work with, and people are going to enjoy that more. And so sometimes that is worth more. And I think that's what you're saying. But if you're like, listen, if the money makes a difference to you, that you're like, it would be more impactful to me financially to get a cheaper policy and then spend the time if something does happen arguing with the insurance companies. Like, I'll have time to kill. I won't have money to waste. Then that's a decision you have to make. And that's a very personal decision. Right. Well, but make an informed decision.
Well, that's what's hard on there is because everybody's thing's different. Everybody's scenario. And so just because somebody saved money with XYZ company doesn't mean yours is going to be the same. And so that's what I've told them to go find out and then get the top 3 companies that are writing checks and get quotes from them. Find an insurance agent you like from them.
Yeah. I think one of the things people forget is that insurance companies run a portfolio. Right. So like, just like people have a portfolio of stocks and bonds and, you know, different companies, and you wouldn't want all tech stocks in a portfolio, and you wouldn't want all, you know, utility companies or something, right? Like, you want a diversification of ideas and, companies that do differently in different economic cycles. And, right, and you want a diversified portfolio for obvious reasons. Okay. Insurance companies have a portfolio, except their investments are the policies that they write. And so what they have to look at is, hey, we have a bunch of teenage drivers. In fact, we have maybe too much now. So what we're going to do is we're going to raise the rates so that when somebody wants to bring us another teenage driver, we'll accept it. It's going to be really expensive for them. So we can't tell them flat out no, but we're going to raise the rates because we really don't actually want that risk entering our portfolio at this time. Okay. But then you have another company that says, hey, you know what we've been doing? We've been writing a lot of, you know, elderly men with clean driving records. The risk, and so we're not collecting a lot of premium. What we need is the totally opposite end of the spectrum. We need young teenage girls that have speeding tickets, you know, and they go, we're going to lower the kind of the premium that somebody would pay on that profile because we want to get more of that in our portfolio. So that way we can kind of juice up our returns for the shareholders or the policyholders or whatever, right? That's how actuaries manage risk across the whole portfolio of insurance companies, right? In essence, it's way more complex than that, but that's a general idea. So all of a sudden you might say, your buddy says, well, company XYZ, they gave me man, this is the best deal ever. I can't believe how great my insurance rate is over here. And you go get a quote and you're like, what the heck? I'm getting ripped off. You know, John said that was, you were a great company. Are you trying to rip me off? And it's like, well, John came from a different carrier that didn't like the fact that he had 2 DUIs, and this company doesn't seem to mind as much. And the other guy's coming from somewhere that he's got a totally clean driving record, and they say, we don't need more clean driving record people in our portfolio. And so there's not really necessarily a rhyme or reason. It just totally depends on what the actuarial tables are dictating behind the scenes.
Yeah.
That's, I mean, right? That's
and
what it comes down
the
to.
different things that they go, if somebody's been with a carrier for a long time, we actually give discounts because you've been back up to 5 years. And so if you've just been switching carriers every year, you don't get as big of a discount to start out.
And some carriers are the opposite. Every year you're with them, they just incrementally raise your rates until you finally leave because they figure, hey, you've been with us for 4 years. Statistically, you're going to get in an accident. And it's just a matter of time. So let's cut bait. Let's raise your premium so much that after 4 years, we want you to go somewhere else, basically. That happens. They'll never say that happens. I don't think it's illegal to even say that they're doing that. But like the numbers drive that. You know what I mean? At the end of the day. It's all financial modeling. It's all financial modeling. It's nothing personal.
No.
Don't take insurance personally.
And it's a business. It's their business there to make money. Unfortunately, that's where it is, and that's why you need to use it effectively and smart to benefit you the most.
100%. Yep, totally agree. So insurance sucks. I hate paying it as much as the next guy. I'm grateful I have it. I spend a decent amount of time every year reviewing my insurances with my insurance agents. I have various policies across different things, and they're important to know what you have, what you're covered for, what you're not covered for, and what you're not covered for, you should plan and have some reserves to essentially insure yourself. It's all part of the wealth management process. So I always encourage people, talk with your agent more frequently. If you signed up a couple years ago and you haven't talked to him since, you need to set up a meeting. Talk to him, figure out what coverage is. If you don't know what your coverage is and you feel intimidated by your insurance agent, reach out to your financial planner. Your financial planner should be able to have some of these conversations with you about what's needed and then help at least guide you through the process and get you connected to an agent that can help, or meet with your agent with you and just help guide that process still. Yeah. Any last words, Rustin?
No, I appreciate having me on here.
Yeah.
It's not the most exciting topic for people, but it's an important one. The more that I've dug into it in my own life and seeing how it is, said none of us like it, but nobody's ever got mad when we wrote big checks to help them out in a bad time.
Yeah, look, it is like the least sexy topic to talk about. I would love to have a podcast where people tune in and I tell them the sweetest, hottest, complex trade to put on in their portfolios and, leverage and, build all this wealth, blah, 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 all this hot topic stuff. It's just like, but this is the meat and potatoes of wealth management. Like, if you don't have this base covered, which is, I get it's expensive. It's more money than somebody wants to spend, right? I get it. It sucks. It absolutely sucks. If you don't get this right, though, you're completely exposed to what I call net worth kill shots. It's too easy to have that one accident, that one freak accident happen, and it's all over. Everything you've been working to build, it's all done.
Yep.
And completely derailed. And that can have a ripple effect through generations. So depending on how serious you are about legacy planning, I mean, it is life-changing to have accidents like this and, do the basics, master the basics before you move on to the high risk, investment vehicles and alternative things and all this stuff. It's like, get the basics down. Yep. I don't sell property and casualty insurance, but I talk to people about it all the time. Yeah. It's your absolute protection against those kill shots.
Yeah.
What I call them.
The cost and availability of life insurance depends on factors such as age, health, and type and amount of insurance purchased. Before implementing a strategy involving life insurance, it would be prudent to make sure that you are insurable.